Hey guys, it is Julie here with JT Wealth. In today's video, we're taking a look at 4 stocks that are in an industry that is seeing very high demand lately, and that has to do with semiconductor chips. So let's get into it. Alright guys, welcome back and thank you so much for being here. Today we are talking about stocks related to the semiconductor chip industry, as there is a shortage in supply lately, creating a very high demand. This shortage is affecting everything from iPhones and PlayStations to even vehicles, and it's gotten to the point where even the Biden administration will be working to help address this global semiconductor chip shortage, and an executive order could arrive in the next few weeks. The White House has pledged to help address the ongoing global semiconductor shortage, and he could be signing an executive order to conduct a supply chain review along with developing a long-term strategy to avoid future shortages. Now, while this shortage is hurting many companies, the chip makers are obviously doing pretty well from this. So in today's video, we're going to take a look at 2 of the larger chip makers and see what opportunity for growth there is there. But we're also going to look at 2 lesser known, more mid-cap stocks at the end as well. So make sure you stick around for that. And just before we get into all of that, this is your friendly reminder that if you enjoy today's video, make sure you hit that thumbs up button and leave your thoughts in the comments down below. Also, don't forget to check out some of the great links in our description, which includes a link to my favorite resource, TipRanks. Their free plan has a lot of great content, but the premium and ultimate come with some amazing perks. So if you're thinking of signing up, make sure you use that link down below to let them know I sent you. All right, now let's get into chip companies, starting off with a well-known one that we've discussed several times before, and that is Nvidia. It trades under the ticker NVDA and is currently at about $609 per share, and that is after growth of about 15% in these last 2 weeks. Now, it does come in as a strong buy, with 14 buy ratings and 4 holds, but at its current price, the average price target is actually a negative 0.5% downside. And those ratings come from a lot of 5-star analysts, and our most recent rating came yesterday for $625, which would be a modest 2.5% upside. The highest price target on here comes from Truist Financial at $672 for about a 10% potential upside. But there is one person who is far more bullish on the Nvidia stock. And that is Todd Gordon, the founder of TradingAnalysis.com, who thinks that this is the semiconductor stock's time to shine. He says, "I've been overly bullish for years and I continue to be. I think we're literally in the next tech boom. The 5G, Internet of Things, smart homes, self-driving cars, virtual reality. There's so many things that chips need to go into, and the demand is going to continue to explode." For Nvidia, he says, "I love the technical setup. Looks like if we can get above $600, we actually don't have resistance until about $1,000. And as I mentioned, we are now above $600. So we will see if his $1,000 price target comes to fruition in the near future." Now, another well-known company that stands to benefit from this chip shortage is Advanced Micro Devices, or AMD. They trade under the ticker AMD and are currently around $93 per share. They come in as a moderate buy with 16 buy ratings, 6 holds, and 1 sell. With an average price target of $107.52, they're looking at about a 15% potential upside over the next year. And those ratings come from a lot of 5-star analysts. Our lowest price target, obviously that sell rating, is at $75 from a month ago, but our highest price target comes 16 days ago from Rosenblatt Securities, with a $135 price target for about a 45% potential upside. AMD surprised Wall Street back in January with their 4th quarter results, where they showed incredible year-over-year revenue growth and earnings. The chip maker's revenue crossed the $3 billion mark for the first time. The company also just announced the full portfolio of AMD Ryzen 5000 series mobile processors. These bring AMD's highly efficient and extremely powerful core architecture to the laptop market, and this play by the company is certainly well timed as laptops become even more an essential part of how we work and connect today. So some great growth opportunity there for those big, well-known chip makers. But now I want to shift focus to some mid-cap chip-related companies that have some great growth potential and maybe aren't on your radar. And the first of those companies is KLIC and SOFA. KLIC and SOFA is a leading provider of semiconductor packaging and electronic assembly solutions, supporting the global automotive, consumer, communications, computing, and industrial segments. As a pioneer in the semiconductor space, K&S has provided customers with market-leading packaging solutions for decades. So at the end of the semiconductor manufacturing process, the semiconductor material is put into a protective case and connections are made so the final product can interface with a circuit board. KLIC and SOFA sells wire bonders, which facilitate these connections, as well as advanced packaging equipment. Since fiscal year 2019, cyclical slowdown, trade tensions, and the coronavirus drove underinvestments in capital equipment. There's been significant capacity shortfalls and complex assembly, which is now increasing demand. And at a 6.5% unit growth, it is expected to support over $800 million of core revenue. Revenue rocketed 86% in the company's fiscal first quarter on a year-over-year basis to $267.9 million, and their adjusted earnings per share nearly tripled to 86 cents. The company expects this strong demand to persist, calling for revenue of $300 million and adjusted earnings per share of 88 cents in the second quarter. KLIC and SOFA trades under the ticker KLIC and is currently at about $48 per share. Now, there are 3 analyst ratings that all come in as a buy, and the average price target is $54 per share, which would be about a 12% potential upside. But if we take a closer look at those 3 ratings, I think our actual potential upside is much higher, as the one buy rating at $40 is from over 3 months ago, which is currently a negative 17%, whereas our most recent rating from just 8 days ago has a $69 price target, which would be over a 42% potential gain. The second company we're taking a look at is called Kohu. Kohu offers the broadest portfolio of equipment and services for back-end semiconductor manufacturing, including a one-stop shop for test and handling equipment, thermal subsystems, test contacting, vision inspection, and MEMS test solutions. Their product portfolio is focused on increasing yield, reducing cost of test, and accelerating time to market. The revenue for 2020 is expected to come in around $631 million, with 45% of that being recurring revenue. Now, the company did report a loss in December, but the consensus is that the break-even is near, and they are expected to turn a profit of $54 million in 2021. It turns out an average annual growth rate of 93% is expected, which signals high confidence from analysts. Kohu trades under the ticker COHU and is currently at $50.32 per share, and there are 7 analyst ratings that all come in as a buy. The average price target is $55.71 for about a 10% potential upside. But again, I think that average price target is being brought down by some older price targets, as we have a couple that are 2 months old and are buy ratings, but their current price targets are both negative 12, negative 20%. We've had a few price updates lately as of yesterday and today, and those are coming in much higher. One rating from today came from Craig Hallam with a $73 price target, which would be a 45% potential growth. So some great growth potential there for 2 companies that definitely get a bit less media coverage than Nvidia and AMD. Now, there are tons of semiconductor related companies out there. I had to do a lot of editing to get this down to just a few so that this video didn't go on for an hour. And you guys know I love hearing from you, so make sure to leave your thoughts on these 4 companies, but what other semiconductor related companies you are loving right now. Please keep in mind that these videos are never a suggestion to buy or sell any specific stock. They're just meant for information and entertainment purposes to bring some new companies to your radar that you can then go and do further research and due diligence on before making any investment decision. If you made it all the way to the end of today's video, make sure you hit that thumbs up button and that you're subscribed to the channel as well. Thank you guys so much for watching. I hope you have a fantastic day, and cheers.